Okay, today we're going to do something fun. We are going to react to a very popular or well-known story about bookkeeping gone wrong. So back in 2016, there was a story about President Trump having an affair with an adult actress, Stormy Daniels. There were payments made to Stormy Daniels that was hush money that were categorized as legal expenses, which got Trump in a lot of trouble. As you guys know, Trump, besides him being a U.S. president, he's also known for his real estate business ventures. So let's react to this video and I'll give you my feedback on it. Not from a political standpoint, that's not my job here. I'm sure that nobody here cares about my political views, but I want to give you my views from a bookkeeping and CPA perspective. So let's start now.
Basically what happened was Trump paid Michael Cohen $420,000. Now remember, Michael Cohen had paid Stormy Daniels $130,000. You think, well, how did it get to be $420? And here's what happened. Cohen said, okay, I paid her $130,000 out of my own pocket. Plus, by the way, I earned $50,000 worth of work for you doing something else. That's $180,000. Now I'm going to have to pay 50% taxes, so you really need to double that, 180 to 360. And by the way, I'd really like a $60,000 bonus. And that's how they got to $420,000.
So pause. Okay, so first thing that comes to mind is that $420,000. It sounds like it's for multiple engagements or multiple scopes of work. So that's why when it comes to bookkeeping, very first thing is that if a payment is for multiple engagements, you need to break it down as much as possible, as detailed as possible in how you record it. So for example, if a portion of it is for a certain project, and then the rest of it is for another project, and then another part of it is for, let's say, a personal gift or reimbursement, as a bookkeeper, first thing you need to do is you need to separate those payments so that you can see how much of those payments are for certain engagement. So, for example, there is a function in QuickBooks where you can split the deposits so that you can say what portion of the deposits or expenses. You can also do it in the expense side, which is what he is talking about here. You could make a split on the expense side, and you could say, okay, for this $400,000 that we paid out, $100,000 of it is for legal expenses pertaining to engagement A. The other $200,000 is for another engagement for legal services for engagement B. Then the other $100,000 is for engagement C, so that you can see exactly which projects those engagements are for. Also, another thing that comes to mind, this is why when you are bookkeeping, you need to write down what is the description of the transaction in the memo so that you know exactly what is this payment for. That's by reading the description in the memo. So let's continue this video.
And so the Trump company agreed to pay Cohen in 12 installments of $35,000 apiece. And the crime here, apparently, is that they labeled those in their bookkeeping, in what's called the general ledger. They labeled them legal expenses.
Okay. What is a general ledger? A general ledger is where you can see all of the transactions of a company or a business. All right, so let's continue.
Now you have to remember, a non-disclosure agreement, which is what Cohen had negotiated and crafted with Stormy Daniels' lawyer, an NDA is something that lawyers do.
Right.
So if you pay a lawyer for drafting and reviewing a non-disclosure agreement, that sounds a lot like a legal expense. So you think to yourself, maybe a lot of this stuff was correctly called legal expenses. You can say, well, the $130,000 payoff to Stormy Daniels, that wasn't a legal expense. Okay, fine. But some of this $420,000, it really was legal expenses. And that's at the very, very heart of the case.
So what happened here was the transaction in question is a $130,000 that was paid to Stormy Daniels, which was classified as a legal expense. Now, some people might not consider that as a legal expense and might categorize it as something else, maybe a personal expense. As a bookkeeper, as a CPA, as an accountant, the best course of action is to actually reach out to the client and tell the client, hey client, we noticed that you had a $130,000 payment to said vendor on said date. Can you please clarify and confirm what is the nature of this payment? So once that happens, once you get confirmation from the client, then you'll be more confident that you are classifying these transactions or that transaction correctly. Okay, so once again, that's why bookkeeping is very important that you do this correctly, because it can literally send you to jail, as you can see here. That's crazy as that sounds. So just as a reminder, that's why I find it wild when I hear people who are not accountants, who are not bookkeepers by trade, trying to do their own bookkeeping themselves to save money. And in their attempts to save money, it actually causes them more problems in the future. So if you don't want that to happen to you, if you don't want to have any bookkeeping mistakes that could potentially send you to jail, let us do your bookkeeping for you. We could have it tax ready in 14 days, or we will give you 1 month free of bookkeeping. All right. So if you want to learn more about that, click the link below and feel free to schedule a call with our team. And don't worry, your accountant handles that.